Okay, everybody, it is me, Gregory Mannarino. This is my post-market wrap-up on this Monday. What a Monday. We have a lot to talk about, so get comfortable. So yeah, Monday, October 26, 2020. Let's start off with this market. Finished lower across the board. There are several reasons for this. I explained some of this in my pre-market report earlier. We'll cover some of it again here. So the Dow Jones Industrial Average fell about 2.3%, about 650 points today. However, the Dow Jones Industrial Average was down almost 1,000 earlier, but then we got a little damage control. We'll talk about damage control in just a little bit here. So, stocks sold off today. The reasons for this were very obvious, at least to me. I explained that this would happen when we found out that the White House Chief of Staff said, oh no, we don't have control over the coronavirus. Market didn't like to hear that. The market wants to hear that we have control, true or not. The market wants to hear that there is a vaccine coming soon, true or not. It's like a pacifier. And of course, this market wants more debt. So, like I said, we're going to cover more of this because I'm going to do a blow-by-blow for you. Today was kind of a pan sell-off except for the dollar, which got stronger. Cryptocurrencies fell under pressure. Gold and silver fell under a little pressure here. Crude oil got decimated, dragging down the financial sector, dragging down the energy sector. The 10-year yield dropped 0.8 is where the 10-year yield stands right now. But again, this market is in la-la land if you don't know that already, okay? It's gone straight up. Regardless of what we had happen today, you realize we're like 5% off a new record high with regard to the overall market? You got to be kidding me. But there are people out here screaming, it's a crash, it's over. Really? Let's see. The Dow falls 2.3%, and that's a crash? No, I don't think so. All right, look. So what I want to do here with you is we're going to do a blow by blow. We're going to cover a lot of stuff here. Some of it will be amusing to you, at least I hope. Let's see. Now I want to talk about this. This is J.P. Morgan, the super bank. J.P. Morgan. I don't know why they have decided to do this, but they flipped with regard to how the market will react whether President Trump wins or Biden. This is J.P. Morgan. Are you ready? This is a 180 from what they were saying just a few weeks ago. An orderly Trump win will be the most favorable outcome for equities. Again, this is a 180 from what they had said just a few weeks ago. Look, this is allowed to happen. Anybody, when we say something, we're looking at a snapshot in time. You understand? Let's say you, for example, you make a call on a stock or whatever it might be. Once dynamics change, you're allowed to change your mind. That's the way it is, especially in the financial markets, which are insane. And if you don't stay on top of these things, you're going to get killed. So again, JP Morgan saying now that an orderly Trump win will be the most favorable outcome for equities. Let me let you in on a big secret in case you do not know. President Trump is definitely making a move here with regard to this election, and he very well might win. Now, let me cover that a little bit more. I explained months ago, the market was pricing in a Biden win and stocks would go higher. That's exactly what was happening. If over the next several days, this market starts to price in a Trump win, and he certainly may win here, you should expect stocks to fall under some pressure here as the market readjusts its thinking. That's it. But I also believe this. We're going to get a relief rally. Whoever wins, whether it's Trump, Biden, don't matter. It's all conversation. You understand that. And I see a lot of you arguing back and forth. Really? Really? It's just conversation, okay? It doesn't matter. Understand that. What this blog is about is staying ahead of the market. Period. If you want to look for conversation like that and get into a heated debate, you're in the wrong spot. So, I expect that no matter who wins here, you're going to get a relief rally from the market. But we could see volatility over the next week. No doubt about it. Especially, again, if the market is pricing in a Trump win now. For a while, it's been pricing in a Biden win. The market is fickle. The market will flip on a dime. Should be obvious to you, especially if you're a trader. So that's pretty big news on JP Morgan. Let's move forward here. Now look, and I want to clarify this. We keep getting bombarded here. Here, I'm going to read this to you. The average daily new coronavirus cases in the United States is hitting an all-time high. Well, maybe that's true, but what they are leaving out is the death rate is falling. I think that's a more important metric. Okay, that's just my view here. You can have your own. Whatever. Our healthcare professionals are dealing with this better than they were before. So, okay, more people may be getting infected, but the death rate is falling. That's the data that I see. If you're seeing something different, please share it. Let's move forward a little bit more here. Now, I want to talk about this real quick. BlackRock just downgraded U.S. Treasury debt ahead of the election. What does this mean here? Well, first of all, let's talk about the debt market in case you don't know. The debt market is a financial Frankenstein. It's a monster. Suppressed rates have allowed a bubble to develop that is beyond the point of belief. That has reinflated a housing bubble. This has reinflated a stock market bubble. And we're going to have carnage in the debt market at one point that's going to shake the core of the earth here. So this is a warning sign from BlackRock, in my view. They're starting to get with the program here. The debt market is a bubble. It's a massive bubble. It's a Frankenstein bubble. It's going to burst at one particular time. But we just heard from the Fed over the weekend, who also recognized the problem in the debt market, saying, okay, everybody, we could experience a credit freeze, a debt market issue. Well, they're going to liquefy the market like you have no idea. They're going to print into oblivion. They're going to buy it all. This is what they want to do, to be the lender and buyer of last resort. You know that, so they can own the world. So this is a warning sign to me. Now, let me just read this to you. And I said, going back to President Trump and JP Morgan, I wrote this earlier. Lions, President Trump is gaining momentum moving into the election. And I know I've been beating this like a dead horse, but we must be ready for anything. Look, I know how badly some of you want President Trump to win. I know how badly some of you want Vice President Biden to win. Okay, it's all conversation. You got to get yourself in the right spot. You must consider all options. You have to have the high ground, always. This way you're ready for it. And I promise to keep you ahead of the curve. Let's move forward here yet again. Crude oil got decimated today. I already covered that. This is important. Morgan Stanley is now shorting the dollar big time. Now, to me, when I hear something like this, a major bank getting short the dollar, it makes me believe we might see a knee-jerk reaction into the dollar. In other words, some dollar strength. Let's see how that one plays out here, especially in this time of uncertainty. The market hates uncertainty more than anything. Okay, just keep that in mind. So again, oil, here's another headline for you. Oil prices slump as coronavirus cases rise worldwide. Yes, but the death rate is falling. Okay, now let's move forward here. I talked about the relief rally already. Now how about this one? It's a joke. I'm going to read, I'm going to laugh. I'm going to read the headline. U.S. new home sales unexpectedly, fall in September. They unexpectedly fall. They don't expect these things. See, these are idiots. You always have to be prepared for the unexpected. That's how you stay ahead of this. New home sales are tumble in September as average price hits a new record high. How do you tell when an asset is in a bubble? When it moves above the ability for a person earning an average salary to afford it. That's how you know. Now I want to talk about this here. This is Jim Rickards. Most of you know who Jim Rickards is. Jim Rickards is putting a target on gold by 2026, and I want to elaborate a little further on this. By 2026, Jim Rickards is saying gold is going to be $14,000 an ounce. Okay. That may be a realistic target, but what is he basing it against? Is he just ever expanding debt? I look at a target price with regard to gold in these terms. I've explained this before, but bear with me here. I believe, and I'm sure you do too, this market again is in la-la land, has no bearing on reality. It's going to correct the fair value via what's occurring in the debt market, which is an absolute monster. It's a bubble. Just like BlackRock is warning people here. Okay. When I think of a target price on gold, I don't want to say it's going to be this high at this particular year, like Jim Rickards is saying here, 2026 gold, 14,000. I look at the price of gold as a final target based upon the Dow. I believe gold will be twice the Dow when the Dow corrects to a fair value, whatever that may be. So again, if fair value of the Dow is 6,000, that means gold will be 12. You got it? Or 12,000. So that's how I like to think of it. But I want to bring this to your attention with regard to Jim Rickards here, who I happen to respect very much. I really do. Look, there's another story here. By Charles Hugh Smith. You might want to check this out. I placed a link to this on my social networks, Twitter and Facebook here, talking about how we are in a global depression. I think that's pretty obvious here. Let's move forward here. Now, let me look on a day like today. I want to read this to you because this is me. This is what I posted earlier. And people, again, they're getting upset. People love it when the market goes up. It's a great thing. Everyone's doing well. But when the market drops, like on a day like today, they freak out. So here we go. Lions, the last thing you want to do here is panic. Let the market do its thing. We don't get rattled. Markets go up, markets go down. When you get fear in the market, like a day like today, to me, it's a buying opportunity because we know we're going to experience parabolic debt. You understand? Parabolic debt is coming no matter who wins. So just get used to that. And they started floating out just like we expected. We expected this. Positive stories on the vaccine. It gets better than that. AstraZeneca, COVID-19 trials offer hope for older adults, and they backed it up with another one later. Let's talk about this here. AstraZeneca says this coronavirus vaccine triggers immune response. Well, isn't that what it's supposed to do? Duh. I mean, but again, they want to float these stories out so people can, I guess, have something to hold on to. The market wants to hear positive news on a vaccine. The market's been promised that we're going to get a vaccine soon by the president repeatedly, kind of like the China trade deal. Never happened. But I believe something is going to come out here with the vaccine. You know they're using children as young as 12 years old, I think maybe even younger, as test subjects for this vaccine. You got to be kidding me. The parents must be high. Now, I posted a link to this on Facebook and Twitter and on the chat room in my website, traderschoice.net, link down here. The money velocity rate, which is the rate at which cash is moving through our economy, is cratering. It is now lower than it's ever been. No surprise. This phenomenon with regard to the money velocity has been going on since 2008. We never recovered at all. All we did was expand the debt. President Obama, no recovery. President Trump, all the way up till now, no recovery, no booming economy. We never had it. It was all a lie. It was all a distraction. Remember, look at the stock market. Look at the stock market. No, the economy has been inflated on the back of mass debt. That's it. No recovery ever whatsoever since 2008. We never recovered. All they have done is vastly inflate the debt, giving the illusion of recovery. It's incredible. But again, politicians lie. That's what they do. Period. Let's move forward here. I want to go back to this real quick. and I wrote this about Morgan Stanley, betting against the dollar. I will tell you what spooks me. This is me talking. We found out that Morgan Stanley is betting heavily against the dollar. I wonder if we should expect a bounce in the dollar on that news. I mean, what's your take? I would love to hear that from you, really. Now, I want to talk about this. It's very important. So we understand that the White House Chief of Staff, Mark Meadows, made a comment saying we do not have control of the coronavirus, completely contradicting the president. I said to you before the market yesterday that the market would not like it. The market didn't like it, as you can see today, but he came out, as we expected, to clarify his remarks. I posted a link to this again on my social networks, Twitter, Facebook, in my chat room, on my website. So we knew this was going to happen. He had no choice. He had to come out and try to clarify the remark he made. He probably got taken out to the woodshed, slapped a few times, and now he's got to clarify his remarks. It did help push the market off of its intraday low, almost 1,000 points. We also heard from Larry Kudlow today. Larry Kudlow is talking about the stimulus talks, how they're going on today, and it's going to be a big deal. That also helped the market off of the low. Here, White House advisor, this is Reuters. White House advisor Larry Kudlow says a major coronavirus relief package, the talks are continuing. They are continuing today. All right. All in an effort to try to prop up the stock market. I talked about crude now, cratering. I talked about here. This 12-year-old boy is happy to be a test subject for COVID-19 vaccine. At 12 years old, he's happy. His parents must be like, I don't know, something's going on here. Anyway, look, let me close out of this. All right. So look, I covered a lot of things here in this video. I want you to ponder what I've covered here. I want you to think about it. I want you to, respond to what I'm saying here. What do you think? What do you think of what I've covered here? Does it make sense to you? Look, this is a freak show, and I've been using that term for quite a long time. Get used to it. Get hip to it. Be ready for anything. That's all I have to say. All right, with that said, I'm going to let you go. I love you a lot. Please share the video. I'll see you in the morning.